All righty. Good evening, everyone. Welcome to the Hurley Investments Market View Commentary for May 20th, 2024. Good to have all of you here today. Looks like we got about 26 in. We will, I'm sure we'll get some more as we're coming on. All right, today I want to start off with two things that I was thinking about. Number one, let's start tonight talking about inflation. And some people were still not understanding inflation, why it's being brought up. So the first question to the group, is there anyone here that thinks inflation is coming down? It's a simple yes or no question. Does anyone here think inflation is coming down? I see a couple no's right out of the gates. Jim, Larry says no, Mary says no. So that was 3 really quickly. How about the rest of you? That's only 3 out of 26. What about Russ? Who else talked to me here? Bill says, heck no, with HE double toothpicks. Yes, in some eyes, but not so much on the big picture. Interesting to look at in that regard, because in all honesty, our markets were up last week on lower inflation. But in real life, the CPI shows inflation easing in April, with the consumer price still rising 3.4% from a year ago. So here's the catch. The inflation was supposed to be 0.4, came in at 0.3. The expectation was core inflation is supposed to be up 3.6%. It looks like it's more over a 12-month basis of 3.4. These numbers are not negative. The price of goods are still going up. They're not doing it 17 or 19 or 20 some odd percent like they were before, but the inflation, the cost of goods, is still going up year over year. This is the reason why we're not looking at rate cuts. Inflation still going higher. If this was a negative number, if inflation was a negative 3.4 year over year, we would see a cut coming in the near future. The price of goods is still going up 3% every year. I think we're getting caught up in the, well, it's not as bad as it could have been. We're getting duped. The short answer is we're getting duped. It's just like gasoline. Hey, gasoline is no longer $6 a gallon. We are getting, I'm just going to call it duped, into thinking that 3.4% year over year inflation means inflation is coming down, which obviously it doesn't mean that at all. It doesn't mean that, because for crying out loud, it's not a negative number. So, to put it in real life, this means no rate cuts this year. In fact, a rate hike is now on the table. And that's where, as we were looking at things last year, Someone made the comment to me, Kevin, you're so negative. I'm like, yes, I am. If it comes to my government, I'm going to be negative. But the short answer is I'm just following the numbers. I wasn't negative when I was telling you guys, hey, we probably only have 2 rate cuts, and I thought it would be 75 basis points. I'm not trying to be negative because I'm Republican and I hate Democrats. That's not the ball game here. The game is the numbers are doing the talking. The numbers are doing the talking, and those numbers are what they are. I can't change them. I didn't come up with them. But the numbers at no point in time said rate cuts. Never did they say that. Which is why we were going to stock picking still. I'm going to make a comment on that. I'm hoping someone else shows up before I make that comment. But here we go. Second thought. Are we in the clear for another big up year in the market? Big up year means greater than 7.75%, which is your typical average yearly growth. So what do you think? Are we in the clear to hold our gains this year? Are we in the clear for another big 19-20% up year? What are your thoughts? And this can be a yes, no. This can be if you have some reasons. That's interesting. The first 3 comments that came across. Hell no. I don't think so. Probably not. Those were the first 3 that came up pretty quickly. I'm going to agree with you. I also do not think we are in the clear. Feel free to read through the big picture. But this is the comment. Any of this sound familiar? We don't even have to go back to the .com years for historical references. How about the 2020 then SPACs were all the rage? What could shock the market? That's 2021, excuse me. What could shock the market? The U.S. falling into a recession and forward earnings estimates following suit. China invading Taiwan. How about Russia invading Ukraine? How about Israel going after Iran now that they're presidentless? A fiscal crisis that drives up market rates. We're on that path already. Inflation accelerating and prompting further policy tightening by the Fed. A collective growth disappointment by the mega cap companies. I love the fact that they even said this isn't an all-inclusive list of potential shocks. There's more. There's quite a bit more. So in all reality, we are not anywhere close to being in the clear. we very well could be negative at the end of the year, which is where protection is going to come into play. Protection on Micron, protection, well, we sold off on, we sold out of Meta, but protection on Google, on Apple, on Disney, on Under Armour. Protection will still be important, most likely, coming into this year. We will most likely do some more covered calls. We're going to get paid this summer for waiting for the market to move one way or the other. It will be pretty interesting to see where the market ends up towards the end of the year. Let's talk banks really quickly. In fact, for this week on Monday, we have Memorial Day. The U.S. markets will be closed. So this week, we're not going to have a trade findings and adjustments because it doesn't make a whole lot of sense. Big money should be out of the market by Wednesday. So you'll see lighter volumes Thursday and next to no volumes on Friday. This is where a lot of the big brokerages take the week off, which means we probably will not have the Monday commentary. We'll just do a trade findings and adjustments next Thursday. With all that said, let's talk banks. Good value or expensive? What do you think? Are banks a good value or expensive? And clear for election, but after election, think we will see the big picture. Yeah, I mean, we really could, I don't know, we might have a news-driven market through the summer, but this could be a really ugly election. I'm gonna be judgmental in how I say this. The Democrats could think it's okay to wreck cities and have riots again, even though they don't allow that for Republicans. I could really see Republicans standing up this time and saying, you know what, we're tired of the crap, and seeing them go very aggressive. And I don't want to say a civil war, but I would think if you're going to piss off the people that own guns, you might expect them to also use them. So it really could get very ugly at the end of this year. An election will be, it'll be significant to see what happens. All right, the banks, no one said anything. Good value or expensive right now? And some of you are like, well, Kevin, we need more information than that, right? I'm going to put this out just a little bit because I enjoy, I'm going to go Bank of America. I'm going to go out 5 years. Looking at Bank of America over a 5-year period of time, it did get up to 47.16. Bank of America, cheaper, expensive, who knows? If you look at Bank of America, it's cheap, relatively speaking. All right, let's look at JP Morgan. It was down 4.5%. Looking at JP Morgan, it looks more expensive. We were waiting. I was shocked it got up to like 204, 205. JP Morgan is rather expensive. But it took a big hit today as Jamie Dimon said, hey, chances are he's less than 5 years from retiring. It was always 5 years out in time. He said, oh, I'm a lot closer than 5 years now. Could be a couple of years. He's 68, maybe he retires at 70. Citigroup. Citigroup is only at 63. Looks cheap when its highs were up at 71.40. Morgan Stanley. It looks right at its highs. Let's put in there Goldman Sachs. Goldman Sachs looks flat as well. It's funny. Wells Fargo Company. It really hasn't moved in 5 years. Of course, it's very destructive to itself, which causes some problems. Local bank out here, regional, Zions Bank. Cheap. It's cheap. Overall, there are a couple big banks that seem to be doing good, but it's about half. As a whole, the industry seems cheap. And I found that interesting because I would have thought banks are probably more on the expensive side. Value investor Bill, I don't know how to say his last name, thinks financials are cheap. These are his top holdings. So again, if we talk about financials, throwing in the PayPals, the credit cards, it was just a little shocking because Capital and Financial Corp is cheap. Ally Financial is cheap. Bank of America is cheap. First Citizen Bank Shares Inc. is cheap. Citi's cheap. Wells Fargo's cheap. I mean, it's just, there's some questions there that bring some things into consideration. This is what we were coming up with at the beginning of the year. And I really enjoy being here because this is fun. Apple, fully valued at 212. Could it get up to 243? Yes, but it's had a really hard time getting above 200. It's having a really hard time at 190. Baidu, target price was 238. Target high was 116. Baidu's having a really hard time getting above 116. Disney, target price was 157. The target high to say it's going to get there, $91.54. Disney is well on its way at beating year to date. Ford, same thing. Google, target price for its target high end was $136.98. It could get to 180. Pretty amazing when you're looking at Google this year. Where are you, Google? You're in Alphabet. Finished at 176.97. Almost there for the year. I do like Bank of America too. Target high where it should get to was 33.70. Target price on the high side was 39.81. Bank of America closed the day at 38.82, down 47 cents. It was within 50 cents today of the numbers that we calculated. Very interesting. Jim, I'll come back to that question here in just a second. Key Corp still looks undervalued, to let you know. General Motors, target price was $36.47. It's upwards at $40 a share right now. A couple interesting ones. Meta, target high was 353. It blew up to 500. It could get to 619. But 619 was the pie in the sky number, right? The pie in the sky number. Pretty neat to see that we're out of it, but we still could be there as an opportunity. MRO. 31.40 was our target high. It was also the pie in the sky target price. Did get up to $29. Under Armour target price was $7.96. Target high, but we expected it to be at, again, sorry, $7.96 was the target high. The ridiculous high-end target price could be $9.75. Verizon, a lot of people ask me about Verizon. The target high where we'd expect it to get to no matter what was $40.05. The target high price was $42, and you guys heard me talk about, hey, maybe it's going to be $52. I came up with that by changing its PE from a 9 to an 11. Its regular PE turned out to grow to 14.75 this year. Its future PE going up to 11. That's how I'm getting my $52.25. Kevin, you changed the PE number. Yes, it's still trading at $40 right now. In fact, let me tell you where Verizon finished at. Verizon finished at, looks like $40.12. Really close to the $40.05 that I have it at. But as you look through how it's growing its subscriber base, doing more fiber optic, offering more opportunities, instead of keeping it at the low end at a 9, I moved it to an 11, which is right in between the 9 and the 14.75 current PE. I'm not out of the gate here. This is just where it came to me and where it's pretty simple to come up with these numbers. So this is where I'm still coming here before summer. I'm reevaluating to make sure that I, again, believe or don't believe that we can get to the prices that we're at. The correct answer is talk banks, good value or expensive. It is a stock pickers market. And I mean, that's the truth. That's the truth and where we're going to be at. It's that way right now for the market. For the market, it is the same. But now it's not just the mega caps or the Mag 7, right? There's a lot of value to be found in individual stocks. And so we're going to look for it. We're going to get into it. We're going to do more microns. What a great return microns had this year. Upgraded to $31 today from Morgan Stanley. Micron popped. Let's see where it finished at. Micron finished up 371 at 129 even. Pretty neat to see the big move on Micron. All right. We're out of the typical earnings season. We're getting into the first week of 3 of retail companies. Do read through the big picture. A very interesting read. It talks about valuations or that Excel spreadsheet again. Pretty interesting to go through. Make sure you do read through it. I still think we're going to go lower this week. I was wrong last week as you look at the Dow Jones Industrial Average. Again, I'm a little shocked that people are spending so much time with the Dow. The Dow is 31 stocks that truly are no more than a TV old school when the market was only 31, 50 stocks in general. It's just a very antiquated, outdated index. Yes, they do have volume. Someone said, how could you say that? They have $272 million shares traded. That's not antiquated. These are fund shares that are bought and sold. It's manipulated. It's bought and sold. They buy and sell out of some to book a profit. They buy back into some. It's not a real impressive index. It never has been. If you're making your judgment calls on 30 stocks, I may suggest that you look for a different reason to be investing, is the short answer. SPX, still bullish. It's a little bit overbought. I would expect, since I know how often we hear the sell in May and go away. Well, if you did that, you've missed on about 4% upside on the S&P. We did have a nice pullback, double bottom. We're moving higher. But again, if you were to ask me, I do think it looks like our market is topping. That will probably move sideways through summer, in which case those covered calls are going to pay you while our market goes sideways and we start to understand where our election may go. NASDAQ hit an all-time high today. It is also bullish, but its chart looks much like the S&P 500, and it just seems like it is also topping. For that reason, I'm calling, hey, we're probably going to get a sideways summer. World S&P end in May, I'm saying 0 for my -2. We'll probably lose half of our gains and be up 2%, but I'm just trying to sit back and not be overly negative. For earnings, we have only half of them listed. Zoom today, Macy's, Toll Brothers, Lowe's, AutoZone on Tuesday, TJ Maxx, Nvidia, and Target on Wednesday. Obviously, everyone's going to be watching Nvidia. BJ reports on Thursday, NetEase, Ralph Lauren, Intuit, and Ross Stores for Thursday, and nothing much on Friday. Economic reports, a really quiet week. Existing home sales on Wednesday, new home sales on Thursday, durable goods on Friday. Next Monday is Memorial Day and the market's closed. It'll be a great day to sit back and go, hey, what are we doing? What are we doing? And can we still make a little bit of a low volume retail run? We took off our Google puts. We do have Under Armour puts at $9. Do not be surprised if Disney and Baidu have their puts come off. With that said, Baidu broke 110 today. So just looking at a chart, our expectation is Baidu will probably go down to 100. Disney is only trading at 103-ish. Where is Disney trading at? Disney trading at 102.90 is where it closed today. But Disney puts expire this Friday. I would expect Disney to go down to 100. That's where I'd like to take it off. The 200-day sits at 96.50-ish. So I'd love to take it off at a round number around 100 and see if it bounces higher, letting it run with maybe no protection, knowing that we could have $3.50 down to $96.50 before it hits the 200-day simple moving average and bounces higher. Under Armour also continues to be heading down. They have 180 million shares they can buy with their $500 million. So I am looking to see where we find a bottom on Under Armour and taking that off and letting Under Armour run. All right. A great article on Under Armour. This one came across the, well, it came across KSL News out here, but what a great article on how Under Armour used to be a threat, but they couldn't stay relevant. They weren't sure if they were going to be a shoe company, if they were going to be an outdoors hunting company, if they could surpass or replace Lululemon for the same type of gear, but it won't be as see-through, so women can maybe hold some of their morals. Yes, I did get your article, but I found this one. I happen to like this one better. Article on Google rolls out most powerful AI. It's really interesting because Google seems to be using more chat GPT than its own Gemini. And a lot of its stuff is built around the open source chat GPT. So it's interesting to see how they're trying to use their own AI to take place, or to not rely so heavily on chat GPT. Powell says inflation has been higher than thought. Expect the rates to hold steady. This is him telling you probably will not cut rates this year. Where I went through the CPI one. Warren Buffett's Berkshire Hathaway has a lot of changes in his portfolio the last quarter. So I just found this interesting, just to let you know. Apple, sold off Apple because he's made a killing on it. Bank of America, left unchanged, but he's made a killing on it. American Express, he's not made money on. Coca-Cola, he has not made money on. Little bit of money on Chevron, has not made money on Occidental Petroleum, has not made money on Kraft Heinz. I actually don't know about Moody's, Chubb, or Davida. But if you look at his 1, 2, 3, 4, 5, 6, 7 top accounts, 2 he's made money on hand over fist. Really, Coke and Chevron he's made a little on, and he's still losing on American Express, Occidental Petroleum, and Kraft Heinz. The power of being able to wait. Again, we do a lot of the Warren Buffett. We are a Warren Buffett investing fan. We can't wait forever. That's why we use the long put. And that's why we try to use that to allow us to wait till the next big up. Financials are cheap, a really good article to read. The Dow's Road to 40,001 chart. Again, another good article to read that hopefully puts it into some context. Poor Red Lobster filing for Chapter 11 bankruptcy. They don't have the best of food, but I'm going to miss them. And then JP Diamond signals retirement. This is the last one I have in here for you. Questions, but I've got 2 questions I need to answer for you guys. Questions for you guys, please type in if you have any. Jim, stupid, there may be a concern that banks' income is mostly on credit cards with no real protection when collateral value seems like housing. Collateral value items like housing. So banks make money in 4 different ways. Credit cards, loans, and loans can be broken into housing, residential, small business or business loans. The big banks make money with IPOs or credit swaps. A lot of banks make money on bonds, the treasuries that they buy or sell. So really, banks have 5 standard revenue streams that make money: commercial and residential for real estate, loans, that it's out there. It's out there, and so the The real question is this. The real question is, how much blood can you squeeze out of a turnip? With how Americans are living and the higher credit card debt, you need to see a more well-rounded company. I would not suggest anyone be in Wells Fargo. Well, Buffett's in Wells Fargo. Well, when Buffett ran his numbers, they looked a lot better. But their management of the company has been awful. Well, Kevin, can't you say the same thing about Under Armour? And yes, I can say exactly the same thing about Under Armour. And Under Armour, really the highest it can get to is probably back up to its highs a couple years ago at 29. Pretty sure it was up to 29. Let's take a quick look. 27, 28. Under Armour still has its fundamentals in place. Is it one you're going to get rich on? No. But can you quadruple what it's worth right now? Yes, you can. And that's why we like Under Armour. Did everything right to get through COVID. It was perfect. All right. So to answer the question, income comes from 5 different revenue streams. Investments are also in there that I didn't mention for banks. So you want to see a revenue stream that can still make money in a recession. That's what you're looking for. And you want to see how well banks manage their money, meaning how many banks are upside down that they can't loan anymore against their treasuries, because their treasuries have just, they're only worth 1%. So they're in a holding pattern until they can have those, get called out or off their books, and then they'll be good to loan against those again in the future. All right. Yes, Maud, I saw your article. As I said, I just found this one to be a little more interesting, but thank you for sending it. Always appreciate it. Russ, yeah, I like Under Armour because it's a cheap retail stock that gives us something to make money at the start of summer and even at the end, when people are buying for their summer wear, their beginning of their school wear at the end of summer, and their winter wear. So I'd love to see it get to 50, but really this year, in all honesty, 15 is the high side number for it. All right, any other questions you guys have? And if I missed a question, please copy and paste it in again so I can touch base with it one more time or see it one more time. But if there are no other questions, guys, I appreciate you being here tonight. I hope this is helpful. Just as a reminder, we'll be canceling the Thursday trade findings and adjustments because it's not a great time to be placing a trade in low volume. And we also will be canceling the commentary for next week. We'll probably just see that in the trade findings and adjustments on Thursday. All right, I don't see more stocks coming in. Oh, glad you guys are still here. Kevin, if you're canceling Thursday, what if? Watch JP Morgan down $9 or 4.5% on a future event with no timetable. If you see it going higher, a September 195, 210 bull call would be my trade. So again, if I was looking to place a trade, we see some kind of bounce back on JP Morgan that, hey, in the next 5 years, Jamie Dimon is going to retire. Any bounce higher, I'd be looking at a 195, 210. September is full call, as it just fills the gap from a news event that truly has no timetable. If you're looking for a trade, there's your trade in the future to make some quick money on JP Morgan. All right, guys. Hey, appreciate being here. Look forward to seeing you here in 2 weeks. And with that said, have a great evening and enjoy your Memorial Day weekend. Good night, everybody.